Welcome everyone to the Kendall Report. It's Sunday. It is game time here. Wow, folks, what a week. I did a video, I remember it was last week, I think early last week, the market that won't stop going up. And we had that. And I want to clarify, somebody seems to think on Twitter that I was predicting the market would go down for 3 days. The 3-day trade needed a confirmation to close lower on Friday, which we didn't get. So that bet is off. And you'll see as we go through the algos here, they just continue to climb higher and higher. The only thing that we're finally coming into some resistance point here yet, but the market doesn't know it. So we're going to have to continue to watch the order flow. You'll see when I go through the database is still very solidly bullish and nothing's faltering there at all. So fair amount of stuff coming out this week. Again, we have employment on Friday, of course. Let's just go through some of the economics and then go through earnings, and then maybe I have a little bit of a riff or two to go through. But it's interesting. Just a quick announcement so you folks don't remember. Wednesday, no video on Wednesday. Bob's birthday, won't be here. So be out to dinner with some friends. So that'll be a lot of fun. Number 71. So quite an achievement. Some of you will understand when you get there. So anyway, yeah, let's just talk a little bit about these things that are coming out. Monday, we have Chicago PMIs looking at 44. A bunch of these PMIs are under 50, which is suggesting contraction. Others are above 50, as you'll see as we go through the week. ISM manufacturing is below. So all the manufacturing stuff is slightly right around 50, but just below. So suggests there's some sort of contraction going on there. And then on that's Tuesday, we get the ISM. We also get the JOLTS numbers, which are job openings. That last time was 9.82. We'll see if it continues down. Maybe the labor market still sucking in some of those jobs out there. We'll see what happens there. Wednesday, ADP, not really significant. Expected 200K. Thursday, typical claims and continuing claims. 230 expected on the claims, new claims. Continued claims were 1.690, and that number's been dropping. And I've just put a continued lower with a question mark. We'll see if that continues to drop as well. And if it does, that's just a stronger labor market. So it seems to not ever be any end to this. And also, we get the ISM non-manufacturing. Now, the non-manufacturing stuff, more service type things and that, are positive over 50. So we're still seeing that come out as well from the in a positive range. So the other thing on Thursday, which is the big number that I think is going to change quite a bit as we go forward, is productivity. Last month it was minus 0.2.1. This month everybody's expecting plus 2. So to erase last month's losses, this is a big number for me personally, especially as far as looking forward and seeing any type of continued growth in the economy that we're seeing. And, kind of putting the, real quick, I'll go through Friday. Friday is unemployment. Those would be big numbers. Looking at one tick up to 3.7 from 3.6 on the actual number. Non-farm payrolls are 220 and 200 in the core from that standpoint. So not just a continuation of everything we've been seeing, right? So this is nothing changing at all from that standpoint. But let's take a step back and let's look in the rearview mirror. Last week we had the Fed come out. They did the quarter-point raise. As I've been arguing, I think in September they do another quarter. We're seeing interest rates bounce around, start to press up against those higher levels again, over the 4% or around 4 on the 10-year again. We'll go through all the details here in a minute. But we are seeing everything starting to shift along the lines that I was saying. Now, just a quick comment is I'm not going to go to the long term tomorrow is the final day of trading for the month of July. So once that finishes, when I come in on Tuesday night to do the video, I will do a long-term dive. There won't be a video on Wednesday. I'll come back on Thursday and finish off the week. But this is, I think there's probably not a lot of window dressing to go on today. Just looking at the futures, we'll go through them in a minute. There's a little bit of a bid yet tonight. 46.10 seem about 10.14 seems to be some pretty good resistance there right now. More details on that in a few minutes. But we're really looking at, I think, the Fed continuing to keep these yields up. And like I've been arguing, everybody else is arguing against me, is these are not going to affect the economy at the levels that people are telling you, and everything's going to roll over. The end is there. I saw a couple of people on the, I knew that the 3-day trade was doomed because all you had to do is go on Twitter or anywhere on the internet. Everybody had the engulfing pattern and all this stuff. Even my buddy, not to call names out, Hugh Hendry, was all excited because he thought maybe this was the top of the market. So all these folks that have been wrong in this market were hurraying, hey, it's going to turn, and it didn't turn. So we found a big bid, and most of that had to do with the PCE numbers. So once again, PCE, right in the range, a little bit softer depending on how you want to look at it. So all of those elements are still out there, and it's almost hard to come up with some kind of bearish sentiment. I've been talking about, I don't know, for maybe 5-6 days that I thought that the market would try to get back under the 10-period moving average, maybe roll over a little bit. Well, all of those probabilities are changing all the time now, and you'll see here in just a few minutes. It's amazing, actually. It just continues to rotate and grind, and the same thing with our database. Everything's just rotating and grinding, and we just stay in this bullish mode. And once the market moves so far, anybody it's in the nature of a human being to expect, well, maybe it's went too far, and you start to question all kinds of things. You start looking for what you're thinking in the markets. And as far as if my position was talking, then I'm a screaming bull. We have a substantial, well over 70 percentile of our database long, so it's hard to find anything that's not long right now. So is it a little frothy? It's hard to say. And I'll go through the database, this is the only day this week that will be up to speed on the database. When I come in tomorrow to do the broadcast, I won't have the view of the database and whatever we get out of tomorrow. So it's kind of frustrating not to have that because it's really key to a lot of my analysis. But it is what it is. This timing, like I've told you before, as far as doing this video at this time of day, just works out really good for me personally, and gives me some space in my life to maintain this for everybody and keep these videos coming. So let's go ahead and let's just cover everything that's coming out. We have earnings coming out. We have 1,609 earnings coming out. Of course, the big guys, Apple and Amazon, after the market on Thursday. So that's going to affect what's going on Friday for sure. And I suspect that will make that interesting. So the good news is we'll have that information when I do the final video for the week. We'll have that information on what came out with those two stocks on Thursday's video after I'm off for a day. So we'll be able to catch that up. But Wednesday, let's go. Monday, really nothing material. Tuesday, mostly a lot of pharma names, some of the big pharma. Wednesday's more or less financial, a little bit of oils in there. And then on Thursday, I mentioned we have Apple and Amazon. There's some others, but those are the big players. And then on Friday, we have Berkshire, which maybe someone cares, maybe they don't. I have no interest in that company, but a lot of folks do follow it. But that's like the major event that's happening. So let's just talk about, I think, the setup for this week. And I keep telling you folks, and I know Powell will say, well, we'll have to wait and see what unemployment is. I'm telling you, they already know the numbers, folks. It's not like they get all the information. They knew what the employment numbers were last week. They didn't finish calculating them on this week. These are last month's numbers. So all these numbers are available. The Fed had them available when they made their decision. They know we're probably going to look at another positive report there. I don't see anything deviating. I didn't look real close. I'll try to do this by the time we come in tomorrow, but usually after Fed, there's some appearances that Powell and some of the other Fed presidents are going to be out talking. Now that they're out of the quiet period, they're going to be rambling on about things. So I suspect that they'll continue the inflation talk. They'll continue all the things that we're used to hearing. I don't expect to hear anything new out of them, but who knows? Anything's possible. And the algos will pick things up. The news market algos will pick up those things and drive the markets one way or the other. But we should have another pretty active week from the standpoint of how everything's set up. It looks to me there's still some positive bias out there. We can't seem to get any kind of negative. I thought we were going to get a pullback. It was encouraging the other day when we closed under the 10-period moving average, but we saw Friday just come back after the PCE numbers, which we knew that was a possibility. I talked about that on Thursday night's video. So, let's go ahead. Let's go dig into the database. A few things I want to talk about then. We'll get through the show. Shouldn't take a real long time. Like I said, on Tuesday night when I do the video, we'll do a long-term dive. We'll go into the quarterly. We'll do the whole bit and maybe even talk a little bit more about the yield curve and expectations there. So Tuesday, bring your popcorn on Tuesday night. Okay, let's go ahead and take a look at what's going on here on the database. Okay, so we'll start off here with this is the daily database. So we were up around, this is a weekly database. We were around 71, 72, where we increased a little bit better. We got 677 buys, 124 sells. My expectation was we would still get a little bit more traction. That we're getting pretty much to the point where we're not going to get a lot more stocks, but as soon as I say that, of course, next week we'll have a big tranche. If we continue to get positive numbers out of this market, then we're likely to see more. And this has been my argument, folks, for a while, is that the way that I see the world is not the way everybody tells you, the Magnificent Seven, there's only 7 stocks driving everything. That's total BS. We've got 11,606 stocks in trend mode, and there are nuggets in this database that have outperformed a lot of these symbols if you were to dig into in your WaveTech user. So there's quite a bit going out. You can kind of see the numbers here on the screen. The dailies, and I'll take you over to the daily view here in just a second. This is the weekly, but we did get, like I said, 677 buys, 124 sells, and there's no way to be negative on this market yet. There's just way too much traction. And I can tell you, this is not the position or the type of configuration that we get if this market's going to roll over and have some big crash and all that stuff. And so let's go over to the daily. Very similar numbers. We're at 70. We're 76.58 on the weekly. We're 77.73 on the daily. They were at 80, so we got a little pullback. So some of the numbers pulled back after the sell-off on Thursday. Friday, we gained a little bit back. We had a slight bullish sentiment as far as the models go. We're looking at, right now we had 582 buys, 329 sells. So a slight positive rotation here on the daily database. So like I said, it's very difficult to see anything that is really super negative from that standpoint. So my just a quick comment here. My expectation is that we'll probably stay well above the 68%. A 10% drop in this database would be fairly significant at the moment. Let me just go full screen for a second because I want to show you some of these stats. I know they might be small on your screen, but over on the right-hand side, you see my cursor moving around. This right now, the current average duration is 22 days on the daily, and we're looking at the average hold. This is on the optimized model, which is the very first column, is 39-day holding. And right now, the average profit is 11. Standard deviation is 41, but the current average profit is 4.7% on these trades that have been on. And this is, of a lot of symbols. This is at 12,000 symbols. So when you look at a database this thick and you go, oh, it's only up 4.5% plus, that doesn't sound like much of a big deal. But when you normalize, once you get to a certain number on the database, so once you get this many numbers out there, then you start to get a normalization. So it's a fairly good view of the world as far as it being in a solid trend. And the database really gives a lot of insights into potentially rolling over. And these stats don't ever get to 100%. That's not where they go. They get in somewhere between 70 and 80% is where our typical top is of the average duration or the average amount of profit earned. And right now, the profit fulfilled is getting close to 50%. So you're looking at a little better percentage there than the average holding. The duration is, well, the average duration fulfilled is at 57%. So I was looking at the standard dev there, so I apologize. I was looking at the, so the duration is now 57% of the daily. So we're getting closer and closer to this thing starting to be a little bit of frothiness, but these markets just keep grinding here. Even if this database comes back to, 20% from where it is right now, back into the 50 handle on the percent bullish, what's going to happen is the strong stocks will start to prevail, and you'll see most of those. All right, so let's go with the S&P. Yeah, I just see somebody talking about Upstart US ST. You should see how it's doing on WaveTech. That would be one that you missed. We built in the trading room last year, we built all of the meme stock portfolio. It's up over 100% this year. Like I just put all the meme stocks, follow along, play karaoke, and you were good to go. So let's take a look at the hourly chart here on the S&P, and we're looking at, it looks like we should top out here, start to roll. Everything's starting to suggest we're probably going to back up into here. It doesn't look like a big backup, but maybe back around the 45.96. We could get down to as low as the 200-hour moving average, 45.85. That's where we've been bouncing around, folks. And this is what I was talking about, that the around 46.08, 46.14 seems to be a lot of resistance up here. And we're printing out, actually we're continuing to print up here up to 13. So we got a pretty good bid overnight here. We'll see how this plays out. We'll go through the market grid here in a minute on the daily. But the algos are suggesting we're going to roll over. And what I've noticed with these algos, by the way, especially on the hourly, once you get a downtick, like the next hour is projecting down, if you get confirmation and that PPM 1 turns down and 2, all 3 of these turn down on the update, we won't be, that's about a half hour from now. So when that happens, that is usually a pretty good indicator. First off, we got to test the 10-period moving average here, which is 44.06, and then if we get below that, then maybe these 45.93, possibly 45.85 could be in play. But that's what this is suggesting here. We're also trading very close up here to RTX on the hourly right now. RTX is 46.15, R3 46.13, which is right where we're trading. Matter of fact, we printed 14.50. So we're printing right into RTX on the hourly level. So we'll see if this backs off of here, and if over the next several hours we can back up and at least test the 10-period moving average 44.06. There's probably going to be some pretty good support there overnight. And I would look just as typical, we're really looking that we should still be maybe under pressure as we come into London, but should start to bottom around London and see if we can get a rally into tomorrow's opening. And probably, most likely, we'll get as extreme, probably 45.93, 46.13 where we trade. There's probably a range that's likely to set up here, and that the this pattern should emerge. And it's been pretty accurate as far as these numbers go. There's been some great trades, and if you folks are paying attention, there's been, I talk about this all the time, there's usually a really good trade around the London Open. So those of you in Europe, you probably get a chance to play a contra trend rally off of that. And the same thing with the US Open. We're printing up really high. We tend to get a little bit of a reaction as everybody comes into play. So a lot of times there's a really quick reaction. There was a real good reaction on Friday morning to play off of even pre-market. There were some numbers you could play off of, and we got some pretty choppy, I would say pretty choppy range out of Friday. There was a time when we printed down into the 45 handle again. Looked like it was going to be an instant replay of Thursday, and then the buyers came right back in and bid it right into the close. So everything stabilized as it goes through. So let's go ahead, go to the daily chart here. And this is, I think, pretty significant. We've got the algos are still looking, there's flattening out. So this is important. We're at 0.13 on PPM1, PPM2 0.18, and PPM3 0.21. So we're basically just at the levels where a minimum level of the PPM, or that angle of attack, is suggesting that this is a good support number, and that's 45.87. So those, we should be able to hold that number. Friday's range was very, very interesting, because the low was when we were talking on Thursday night. The overnight low after that sell-off was pretty much it, right? So that Thursday low was it. And so we just rebounded, and there was just a steady bid coming all the way through the session, and then some volatility between, we'll call it 46.14 and 45.85, just round numbers. Intraday is where everything was trading from. And just so you know, those of you following me on Twitter, I'm trying to be as active as I can on Twitter. I don't really like putting a lot of parameters out, but I've been super busy because it's end of the month, and we have a lot of institutional accounts that we're working with on just looking at portfolios and stuff. So I've been really tied up with that for several hours in the morning. So just know that I'll be around when I can be on Twitter. I'll try to keep some things. Sometimes I can get some pre-market stuff out there. Yeah, so I just see somebody, and we'll talk about the BOJ, by the way. Somebody just mentioned that on the chat, and everybody forgot about that whole scenario by Friday morning, because PCE is there. I'll just make a quick comment on a lot of those type of things. I was on a Twitter space one day, and everybody's talking about how China's going to roll over and all that stuff. Listen, nobody cares. You have to have a major catastrophe in one of these countries to actually affect the markets on a big level. The algos picked up things in a very emotional moment the other day and drove that down on the BOJ. Is it significant? There's a lot of folks that would like it to be. I'm not sure it is. And a lot of times I look at events like that don't really affect corporate earnings, especially when we're in earnings season. a lot of corporate earnings. They're not going to be affected by the BOJ selling treasuries or something right now. That's just not going to be material. There's bigger fish to fry, as they say at the moment. So pay attention to like U.S. news, and they're very seldom do any of these China stories or some of these international stories, with the exception if we go back to late 2010, 11, when the European banking situation was getting pretty hairy. We don't really have anything like that right now. So let's go ahead and just take a look at the market grid. So R1 is 46.20. R2 is 46.35, which puts us pretty close to where we were on Friday. I think we printed a 30 handle. And then, actually, I think that was Thursday's print high. One of those days, I'll look at it here. Let me just look at it real quick. Yeah, so 34 was the high on Thursday. And then on Friday, we printed 16 was the high. So that 30 level is right at that very top. So R2 is right now at 35.88, and we're looking at S1 45.92, which was right into that hourly target I talked about a few minutes ago, and then 45.77, just a little bit below some of the numbers I was discussing as far as the hourly chart setup. So that's probably, we have enough volatility right now and enough things going on this week that maybe for tomorrow I'd look at an S2, R2, but watch how the markets react right around. We've already traded, like I said, we're just 46.20. Yeah, I'm just looking, we're printing 14.25 right now in the futures. So that 20 level would be a pretty good mark to watch for resistance and look for some kind of rejection. You might be able to find something off an hourly chart or something a little lower than that. So we look at, this is a conversation we've been having. The algos have been rolling over, and somebody said, I thought it was kind of cute, they said that the algos have been drunk. They're actually doing exactly what they're supposed to be doing. It looks like we're a couple days off from actually seeing the potential for a negative PPM1. PPM2 is really kind of flat. It's going to be normalizing around this 0.18. So if we do print down to a 21-day moving average, right now that number is all the way down at 45.37. But remember, every day that average is moving about 9 handles per day. So literally in 3 days, you're going to be 25 handles higher than where it is. So mid 45s, 45.50, somewhere around that is pretty much where we're going to go. We'll take a quick glance since it's Sunday night at the weekly chart so we can get an idea what the setup is there. But you can see how these algos are setting up. Let's go ahead and go to the weekly. This is this insane angle of attack, which I've done something interesting here. Let me just look here. Yeah, the algos here are set on 50 looking forward, and I've set everything forward by 50. And I'm going to show you at some stage, I'm going to try to do maybe a live session again on this coming Friday. I want to show you folks, you have to have a premium account in TradingView, but I want to show you what it looks like with the 5-second chart on ES, and you set it for 150 looking forward, which is about 6 or 7 minutes, and it's amazing the patterns that you're going to pick up and the forward-looking ideas you can get if you're a day trader. It's pretty insane. So I will definitely try to do a video on Friday. I know I won't be here on Wednesday, but we'll definitely try to do that. Yeah, the update on the 3-day trade is you should have been out. You should have been out on Friday. It's over. There is no 3 days. It's the first day, Friday. It had to close lower. It did not. You're out. So, and I mentioned that you should probably sell an S2 at least. I'm sorry, an R2. That's where you want to be on that. So just know that that trade is very clear. I'm hoping I can work the bugs out on this on TradingView. I've got a couple things that, yeah, there was a reverse of a reverse, is what Brad's saying here, and that's exactly what's happening. But I'm trying to get this. There's a bug in this logic that I've been working on. If I get that out, I'm going to put out that 3-day trade module. I'm going to put that out for free on TradingView. I'll let you know when that happens. I still got a bug. It's making me crazy, but I haven't looked at it for a couple of weeks. So I'm going to try to dig into that hopefully next weekend. So we'll just keep going. Yeah, we're still getting a strong print here in the futures. We're up printing 17. So maybe we'll get to watch this 20 handle together. So yeah, 18 high right now. Good call. All right, so just going back to this weekly chart, okay, the weeklies are also getting peak values, and that the fact that the algos are suggesting it's going to turn down does not mean that there's not support or the market can't go higher. Let me explain this. PPM1 is at a 0.91. Anything over 0.25 is bullish, right? And even if it's right, if we go all the way out to August 28th, 4 weeks out, it's still a positive formation, still a positive angle of attack. And you can see that the WTAR forecast on the 10, it shows it flattening out and then accelerating again. And this is a weekly chart here, so this is very substantial. I went through quite a bit in talking about this on Thursday night, Friday's video, is that the intermediate charts are going to be the place where you're going to want to identify the trend. And this goes to the WaveTech database. It's at 75%. That thing turns like a cruise ship. It's a big turn when you want to make a turn in this database, especially on the intermediate. It's a slow moving. You can't turn very quick. The dailies will turn a lot quicker, but the intermediate will not. And that's exactly what we're seeing here. Is this thing's not going to turn. I mean, I'm thinking if the way things are set up right now, we're going to see an all-time new high on this market. That's what, 48.18, I think, something like that. Let me see if I can find that. 48.08 on the futures. I mean, this thing has just got a trajectory up there to go higher. So yeah, there just doesn't seem any quit. Although the algos, if you look at, I've got my cursor running through this, right through this worst case number. And if we go all the way out into January of 24, this is a weekly graph here, it's still at a 0.43 positive. So the probabilities of us getting below the 10 period moving average right now is not zero, but it's close to it. And any move down to the 10, which will be equal to the 40-day right now, will be an absolute buy, and we should see a buying opportunity off there. The way we're set up right now, I suspect this one I want to look at here from the market grid standpoint. We're looking at R1 is 40.30, which was last week's high roughly. And then R2 is 46.58. And RXT this week is 47.10. You know, this is interesting because we have a lot of earnings. We've got a lot of news coming out this week. And you can't find a negative piece of news to save yourself. Everything seems just to keep coming out really, really good. And even the Fed has finally agreed with me there's not a recession coming. And so whether maybe it's like everything else, if they actually finally say there's not one coming, then there is one coming. But I will, like I said, as we go through this week, Tuesday night, bring the popcorn. It'll be a little bit longer than normal. and I'll go through stuff. I'm still trying to get through the S&P right now, but I want to set this week up pretty good for you, mainly because I'm not going to be present here on Wednesday, but just make sure that you have a good handle on all of these numbers, because that's going to be substantial. Last week's low, 45.53. The worst case that I was trying to come up with is a reprint and a retest of that low. If we took out that low, maybe there's more of a rollover and we could head to the 10-period moving average, but I don't see what's going to drive it at that level right now. I can't imagine any of the economic stuff that we went through earlier that there's going to be any type of surprise that's going to be, that's going to drive the markets that level. Like I said, I did not look very closely, but I suspect we're probably got some things to, some talking heads, and Powell and a bunch of folks will be out there rattling on about what's going on in the world. All right, let's get into the NASDAQ. And let's just start with let's stick with the weekly. And I've been talking about this. I look at this chart. I mean, this is just a parabolic curve. Nothing seems to want to go down here either. We get a couple of days, but if you look at the algos are suggesting that we're going to flatten out a little bit. But even at the worst, it's suggesting that maybe by 3 weeks from now that we could see the ppms drop down to maybe plus 10, plus 15 is what's being projected, and that's still positive. And the other ppm 2 and 3 are just very positive. So it's just really hard to, like I said, it's hard to be negative here, and the Qs are still in play here, and I don't see anything changing that at the moment. And so let's go to the daily just to get a little shorter term viewpoint. So daily, basically the 10, 21 is just flattening out here. So we've got really no indication of any big decline, but it's what I refer to when we get into this kind of configuration, it's more of a pivot zone. So if you did close below the 21, then you probably go down to the value of the 40, and that the 21's 15,564, the 40's 15,271, and that's going to be really similar to the 10-week moving average. So it's just not, it's just a likelihood, and the probabilities are pretty low as far as that stuff goes. All right, so the Russell, we reversed the reverse on the Russell as well. Market grid turned up, but we're still seeing this rolling. You can see the projection looking out. Now this stuff changes, and if you do have the indicators and you have the premium version, you can look at that 5-second S&P chart. You will see how the new calculations come in, how the algos are constantly adjusting and looking with the coefficient. It's fascinating to see how this goes. I suspect that these downward projections are going to flatten out and probably not be as drastic as they look right now. And maybe we get down to the 200, but I doubt it. I can see us getting to the 40 on all of these indexes, and that would be equal to the 10-week moving average as well. So let's just go over to the weekly just for a minute here. So weekly not as positive, but we're still, this is a broken record. We're still in that trading range that we've been in, going all the way back to May 22, and we're just still at the upper end of that range. And it does look like some of the algos are suggesting that we're going to get higher here from that standpoint. But the configuration is, I think, a little more positive. like I said, I'll go through all the long stuff here, long-term stuff on Tuesday night's video. All right, so we'll go through the 10-year. 10-year is still climbing that. This is a weekly chart, still climbing that angle of attack here. We actually traded just below the 10-period moving average. That value right now is 382. We traded down to 379.80, all the way up to 402 and finished at 497. There's still an upward bias, and I've been talking about this for a while, that angle of attack, that 10-period moving average on an intermediate weekly chart, which is what we're looking at, is going to be your key number. And the absolute worst case, a disaster in this chart would be a move down to 370. That would be that would be a really bullish trade if you're looking to buy bonds. But I don't expect that to happen. I think with everything that's coming out this week, we're probably going to be more stable with a slight bid. And I'm going to throw up here. I don't have them up here right now, but let's go up here and let's put the Fib projections on the screen here. And if we look at what the Fibonacci targets are, we've actually gotten to that Fib target 1, 401. We printed up to 402. Fib target 2 is 429 and we'll just call it 450. So there's still higher prices to go on, and so the yields could easily get to 430, 450 in here. And I'll show you on the yield curve that I do. If I forget to do the yield curve on Tuesday, make sure in the chat line that you're reminding me when I get in interest rates. Hammer away at the chat line so that I make sure I'm doing that. Because I believe the yield curve is going to get really, really interesting, and it's going to mess up a whole lot of narratives out there if I'm right. And I believe it will. We're seeing the evidence that I will be right. It's not quite there yet, but it is starting to look that way. So let's just stick with the intermediates here. Now we managed to print up to Fib target 2 on the 2-year, on the weekly. 495 was the high. Fib target 2 is 5%. So we're just right to that Fib target. 5% is kind of the high. You can see what's interesting is that the algos are suggesting we're going to flatten out. Maybe there's a possibility of some lower rates on the front end of this curve. And where the 10, and I'll probably go through the 30-year, which I normally don't cover on a daily basis. But all the longer end of the curve is starting to turn up and starting getting forecast of higher prices on the back end. So that means that we're going to start to steepen. The yield curve is going to steepen, or in this case, since we're inverted, it means that the inversion is going to start to bleed off. And so that'll be interesting to see if that happens. And it'll also be interesting to see what happens with the real estate market. And, I think there's some interesting things going on with real estate, which probably is appropriate to talk about real quick here. Let me just come back on screen for just a minute here. Okay, so just real quick, I just want to talk about this because there's some interesting stats out. So if you look at, all these people that think because a few people bought some and leveraged Airbnb and put 3% down, and we're back into 2008. The real estate market's really structured very interesting. I think it's around 28%. Maybe somebody will correct me, please do. These numbers are pretty close. 28% of all the mortgages out there have a rate under around 3.2 or lower, and in most cases closer to 2%. There is another 14% that are under 4. So all of a sudden and then there's about close to 30% of every home has no mortgage. They're owned in cash, okay? And you will find, especially on higher end real estate, there's very few mortgages. They're usually all held in trust, and there are no mortgages on these. So there's no incentive for people to sell houses. And so therefore that means there's a really good chance that the market's going to stay tight as far as demand. And I just think it's going to stabilize here, and there's not any scenario that's going to cause anyone to panic because there's no duress, or I can't find the duress in the market, okay? There's just literally no duress. If there's all the people that bought Airbnbs and were doing that business, if they all went out of, lost their, and went into foreclosure, it would be minuscule relative to the larger market. And I believe these numbers I quoted are fairly close, because when I was doing this, I couldn't find a report that I found, but it's pretty close, because all of a sudden now you're looking at, almost 60 plus, we'll just call it 60+% of the housing market has no duress. Contrary, going back to 07 and 08, where there was lots of duress, because it was you can almost flip that equation, where everybody was levered and there was a bunch of bad paper out there and people that couldn't make their mortgage payments. Right now, that's not the case, and especially with labor markets and everything like that. So this ties together with that back end of the yield curve, and it starts to build a little bit of a scenario on what I think is likely to happen with some of these, the configuration of the back end of the curve, okay? So this is going to be interesting, I think, as we go forward, because there's a huge shortage. I think we underbuilt the housing market by 5 to 7 million units in the last 10 years. So it's not going to go away, and even multifamily is that case. So anyway, all right, well, let's go back to the charts, and we'll go on to crude oil here. All right, so crude is continuing to climb as well, and we're basically flat on this thing from the standpoint of tonight's action. But you can see we still, and I've been talking about this is weekly, that we still have a positive slope here. Looks like going all the way into September. So we have 4 to 6 weeks going on, and with this pattern that we're in. So we're going to continue to move higher, and whether this is end of summer demand, whether it's some of these cutbacks, and we'll see. But oil's going to keep climbing. There's no reason for it to go down, and we've had all kinds of production cuts, and there's still like crazy stuff going on with Russia and all that stuff. So, but the bottom line is that this angle is not going away, and this goes back to a scenario I remember telling you folks. The algos were turning up, going all the way back into June 20th is when the following week was the turn up on June 26th, and we've been straight up since. Whether we go sideways into this range, we're not going to take out this 10 in this pattern, and it's just going to be very solid. So it's sort of interesting, I think, from the configuration. We've still got August and part of September. I guess this driving season is still going to keep demand fairly high. So let's do a real quick snapshot of the daily on the crude. And yeah, so we have, let me just bring this up. We've got some fib targets on the upside here, but it looks like the algos are suggesting we can flatten out in here, but we're going to stay above the 200, above 75. So the range is probably going to be 75, any kind of extreme up to around 82, 83. So we're going to start to flatten out, looks like, but nothing big in that weekly chart. I can't emphasize, folks have been around me for a while, but it's hard to remember when I get into this mode, because what we're at right now is intermediate charts are dominant trends, and they need to be respected all the way down. So you have to just always respect that intermediate trend, especially when you get sloppy trends in some of the shorter term. So we do gold. Nice little reversal the other day in gold. I was fairly shocked at how we just, after having this really ugly close on Thursday, that we just gapped higher and went up. I remember covering this on Thursday night. I thought, is this right? Is this possible? And it was. And you can see that angle of attack here on the daily is really starting to build. Let's go over to the weekly. I'm just rattling on about the intermediate. So there's some new fib targets that just came out this week, and those numbers are 2175, 2280, 2344, which is sort of interesting from that as gold is starting to get higher projections. But there's a mixed scenario here on the ppm, so I still think we just kind of hover sideways. We stay within the market grid, and right now the higher end of the market grid is pretty high. This is weekly 2050 and 1950. So you got a pretty big range projected for this week. We also have, this happens sometimes, we have up new fib targets on the upside, new fib targets on the downside, which is typically usually when we're locked into a sideways range. So I would suspect that we hover around these moving averages around 1980, 1965, and we probably stay under 2000, maybe 2010. If we get much above 2000, Peter Schiff's going to start screaming to buy. So then we know we're going to come back in. So the bottom line is, it looks like this is kind of the configuration we'll have to look at. All right, so Bitcoin final market. I've been talking about this. This is the weekly Bitcoin that we've got this, a couple things. We've got this upward slope. Looks like the algos are trying to stay positive here. The number that I've been throwing out there is that 28,825 is the 10-period moving average. And we have those fib targets on the upside yet. So we still have fib targets for 36,700, 40,600, 43,308 are these fib targets up here. And we still have this angle of attack on the upside. And it looks like over the next couple of weeks, we could see this continue higher. And maybe that has something to do with what we're seeing here on equities and the correlation toward equities and all of that. So, we'll just continue to expect that. Let's go to the daily. Daily's got a little mixed picture. Still have some downward patterns here. Looks like we have a few more days of consolidation to down. This has just been a really strange pattern to follow here on the dailies. We've just been sideways in a range. It's kind of drifting. So no real momentum, although the algos on the daily are suggesting that there's still some downside. And we're around that down right now. If we go out to August 9th, and the algos, they're suggesting 28.5 is the target range there. So that's still in line with the weekly targets and all of that stuff. Okay, folks, that's going to do it. Appreciate everybody showing up as always. Remember, Wednesday, Bob's birthday. Won't be here. I'll be enjoying myself. And number 71. And I tell you, I still have my hair and I'm still pretty vibrant at 71. I'm very grateful. I can tell you that, folks, right now. You get older, you start to realize you're pretty lucky. I could name a list of friends of mine that are no longer on this planet. And so anyway, I'm grateful to be here hanging out with you guys. A lot of things going on that's really positive. And I just want to be like Carl Icahn at 93 and still be trading and still be a vibrant guy. I probably won't be doing daily YouTube videos, but I still enjoy doing this because, as I've told everybody that's followed me, is I just trade better when I'm doing this every day. It keeps me responsible for things that come out of my mouth, and it also reminds me of all of the patterns that we do and all of the analysis that I do, folks, every night. This is not pre-rehearsed. I mean, I walk the markets forward day by day. I have a procedure, and I like to at some stage do a video on how to walk forward your process, and that's one of the most important things that you can learn how to do. And that's the beauty of, I not only have I been doing YouTube videos every day, right, for the most part, unless there's a conflict, but I've been writing market commentary for 20 years before that. Behind a firewall, I wrote market commentary every day, and I know there's folks watching that read that. I've had people pay for my service just to get my daily commentary. So now they get it for free. So, but the bottom line is, there's something to be said about being consistent in your work and doing the right things and being methodical about it. So make sure, I always have this famous line. Some of you will roll your eyes that have been around me a long time, but it's process over attitude and opinion. And attitudes and opinion keep you in when you should be out and out when you should be in. And I've seen this 1,000 times over the years, how people get influenced. And this is what I was saying earlier. It's very easy to get very subjective and not very objective especially when you put your money to work. You tend to get very subjective once you put your money in. So, lesson for the day. Have a great day. We'll see you tomorrow at the same time. Appreciate everybody watching. Thanks, Sue. I don't know, I really like this song. Yeah, Mike, except for me. If you only knew. I always play this because I enjoy it and I know you guys hang out. So we'll see you tomorrow night. Thanks for hanging out with us.